Okay, I see my Twitter here now.
Yeah, cool. All right then. I can see a few people are joining now, so we'll just get started. So, thanks for joining us today. We today have with us not only Phil Swift,
Hi guys, happy Friday.
happy Friday, and also we've got Steve, or otherwise known as BTCFeen. Say
Hey
hello,
guys,
Steve.
thanks for having me.
Hi, Steve. So, just the plan for today basically is I'm going to go through and give you sort of my quick update as to what's going on, which hasn't really changed over the past couple of days, and just highlight a couple of things that I'm keeping an eye on. Um, and then I think basically me and Phil are just going to sit back and have. I've got a beer here, so I'm going to just let Steve do all of the hard work after that. Um,
Sounds
so
good.
So yeah, I think I've fired off a few things that I'd sort of asked Steve to kind of consider. So he's going to go through that stuff, and I'll try not to interrupt too much. But obviously, I'll keep an eye on the live stream chat as well, and see if there's any questions. And if so, then I'll pose those or any others that me and Phil may have. So just to get cracking, obviously this is Steve here, BTC Fiend. I talk about Steve's inputs quite regularly. Particularly, he's the man I come to whenever my bullish thesis is starting to crack a little bit. Particular times I can think about is, and as Steve mentioned before, just after the COVID dump, Steve sort of kept me right in terms of the direction that we were going to go, and with regards to all of the macro stuff, and not to lose sight of that. So quite often, Steve, the guys all sort of ask what Steve's saying. So yeah, so they basically know who you are, I think, is
Okay,
generally.
great.
So I don't know if my view here is actually going to align with yours or not, Steve, but I'd sort of mentioned the other day that we're on a TD9, or yesterday was a TD9. We'd had, I think, one of the longest running of streaks of constant back-to-back green candles since, like, I don't know. I looked all the way back through the chart, and anyway, I couldn't find greater than, what was it, 8 days or whatever. So obviously we've had a really good response off the support lines. I mean, I must say it's been quite incredible how well these have held up, but they held up, they have, and obviously we've had the bounce out of here. I had planned on some of the profit that I'd taken here, albeit not a huge amount, recycling some back in at like 38,500. I got filled on that today. I'm still long at the moment, but I am going to take profit on it on the off chance that we may come slightly lower this weekend. And part of the reason is that if you actually look at, obviously, first of all, we're at the top of the range here. So obviously caution should probably be applied. However, the price action's almost identical to what we saw over here. You can see we sprung up basically off the lows. Slightly different, came back obviously down and got a retracement, which is what basically everybody in the market was looking for and was not allowed to have, which is incredibly frustrating. But obviously we popped up to the top of the range, formed a bit of a bull flag, wasn't too sure what we're going to do. Funding was actually negative at the time, and then we sort of dropped back down. We dropped almost to an identical level here. And I'm not just using this as an example, but sort of textbook stuff in a bit of a bearish trend, as if you break down, you come back up, retest the lows, and then if there's downside to come, there's downside. But if there's upside, you should see some sort of reclaim above this and then go higher. So my general view at the minute is I'm looking to take profit on that sort of leverage that I've added in around here. We're not quite there yet. I think I'm looking at like 39,300, 39,333. I think I've gone for all the threes. To just secure that profit off the lows, pay myself. And then, as I say, if it's all good, we should start dancing above here and then can do some more. We can go long again. Failing that, and, it is the weekend. And my theory is that, if the books are going to be thinner and there's an opportunity there, and there's still quite a few people who are leveraged long, then perhaps, they might push the market down, and we do get that sweeter entry around like the 50 DMA, maybe back to 35. It would be quite nice to get that, given that we actually haven't had any real pullback apart from Monday night's pullback for basically for days. So yeah, that's the general view. I mean, as well, obviously, we started rolling over on across time frames this morning, so the picture isn't as pleasant as it was. But the important thing is we've got that three-day green above the 50 DMA, and that is one of the best signs to be long that you can have. Really, I shared that chart with you actually the other day, Steve, as well, didn't I?
Yeah. I mean, the 50's been pretty good. Yeah, I guess generally, yeah, pretty much agree with what you're saying there. I think the 41 level is pretty important. So I think just going into that, we just need to make sure that if that flips, then it's bullish. Then but for now, I mean, having 9 or 7, 8 days in a row?
Yeah.
Evergreen or something. Yeah, I wouldn't be surprised to see it pull back from where it is here. And as you were saying, I mean, funding in this whole range has been basically extremely pretty negative, except for maybe a couple points where we went up to test the top part of the range.
Yeah, I mean it's not crazy bullish now, which is that would be really quite concerning. But I know that this isn't the best overall indicator anymore for funding, but you can see it was pretty similar up here. If anything, it was actually slightly more negative. So conditions aren't. If this was super bullish, then obviously normally above 0.1 when funding's 0.1 and above, I get a bit worried. But it also matters about the context.
Right.
So even anything positive up here is not ideal, given the bearishness of this. I mean, I remember when we came back out of 12k to 10k consolidation, funding was still pretty bearish, as we broke out. And I mean, this is what I'm looking for. I don't know if you'll agree, but it's kind of classic Y coffee, and you sort of break above, you do some consolidation, and then you continue on up.
I was kind of looking at this as an analog along with the 2019 bottom after the large bear market. I see a lot of similarities there. So kind of basically what I've been looking at is, I think what happened was, I mean, the market obviously from 10K was extremely bullish. We pretty much went straight up to 65K. The Coinbase IPO, I was telling the guys at the fund, like that was something to look out for a potential top. I didn't think it would be the overall market top, but I said this even a long time ago. I mean, that was kind of similar like the CME futures in 2017, a big event everyone's looking at, and so that was the top. But I think one of the biggest problems was funding. At the top, anytime we try to break out above 60K, I mean, margin longs would just pile in, and those guys just had to get washed out. And basically what happens, I think market makers or whales knew that. And so once it kind of started drifting down, you started seeing institutions kind of selling above 50K, and we started losing some of those moving averages, and I think they were out. And then as we got closer to 45 or 50, it kind of kept continuing to drift down. And then after that, like from 40 to 30 was all forced liquidations. So that was happening in a matter of 15 minutes or so. And then from there, basically I think it's just been accumulation since. And so I think obviously that part of that drop down was, based on, it was blamed on the Chinese miner situation and Elon and so on. But I think really the reason we were able to drop so quickly is because of the margin long buildup. So all those got washed out immediately after that happened.
Yeah. So basically, on here, this is basically what you're saying, right? Is the open interest just basically dumped
Right.
from
Yeah.
6.3 down to 3.5 in basically like one candle,
Yeah.
which is insane. I mean, we were actually trading that live on the site. I got out and then got back in like pretty much right at the bottom.
Nice.
Haven't had a particularly fun time of it, to be honest. Given made like really good gains in here,
Yeah.
and then like admittedly have been chopped up somewhat because it's
Right.
been pretty tricky trading conditions, particularly for the way that I trade. But the the interesting thing here is right that OI is now back at 6.4 nearly, which is pretty much the same place it was when it got totally wiped out. So
Yeah.
the
I
market
do
is
think
loaded
that's,
again.
yeah, I do think that is like mostly, maybe not mostly shorts, but it is quite a bit of short still in this. And I'll probably talk about this later on, but the USDT based contracts, like that's having a new pretty large impact on the market and derivatives, just because instead of being using Bitcoin as your collateral, people are using stable coins a
Yeah.
lot more now. So they don't have to have, and so that's having a bigger effect on the market, I think.
Oh yeah,
Um,
I mean, I realized it was actually it didn't occur to me actually until this candle, the impact of that, and I realized, hold on a minute, if you make a loss in this market, which obviously there wasn't much of that happening on the way up, but if you make a loss in this market and you have a dollar debt, then you're effectively you're leveraged on the way down as well, because your
right.
collateral becomes worth less and you
Yeah.
still have that dollar debt to pay off. So what might be like a relatively small loss up here becomes a really difficult thing. As you go down, it becomes exponentially more of a problem for you.
Yeah, exactly. And so I don't really trade much margin anymore, just because I think, I've been around long enough. I'm more of the positional trading type where, I like to kind of trade the cycles around the 4 year cycle and be in and out from that. I mean, I will do it occasionally, but I just think it's less stressful for me, and I like to kind of just be in and out of spot.
Yeah. I
So
mean,
that's kind of where I'm at. But yeah, I do look at all this stuff though, because it does give you an idea where the market is heading and why things are happening the way they do. So
yeah. I mean, one thing that, well, particularly for the big moves, you can see you need to sort of be in touch with what's going on, but you don't need to you don't need to make every single trade in this market to make money. And I think I mean, you have basically said what me and Phil have sort of, I think, come around to ourselves naturally on our own is actually over time getting the big moves right is way more profitable than getting chopped up and getting stuff wrong. And I mean,
yeah,
I also think that there is a time to be trading the 5 minute chart. For me, there is a
yes,
time when you need to switch that on, and it's just not when we're in chop. I mean, it works for some people. However, like my view, which I think is similar to yours, is like make the money with the easy big moves, get those parts right,
yep,
and then when chop comes along, then you can sort of chill out for a bit. If you get the big ones right here, then you shouldn't have to trade every single move.
Yeah, I think it's about like figuring out, which takes time, right? As a trader, like it's figuring out when for you is the market in easy mode or in difficult mode, and you learn after a while what sort of trading conditions suit your own style. And certainly for me, it's the higher time frame stuff, and
yeah,
choppy trading. I'm not a scalp trader; it just doesn't work for me personally. So I kind of figure out over time, which sounds like what you're saying, Steve, sort of when to step back or when to put your foot on the pedal a bit more.
Yeah.
yeah. And I generally think that it's kind of interesting on Twitter. I mean, you have a lot of people that are loppers. I mean, people that might have like 0.001 Bitcoin that act like they, rule the world in trading and so on. And I think the people that make the most money with Bitcoin are people that have a longer term view and a longer term bullish view, because I still think we're extremely early in this market, and there's still a lot of asymmetry, and a lot of that is due to the macro environment. And I can kind of go into that or start talking about that now if you want, or if you want to, continue to talk a little bit. But yeah, I think that's the view to have, especially for most people, because the day-to-day trading, I mean, it's stressful. Plus, it's not really conducive to most people's home lives. I mean, it's people don't have the time to do it, so it's during the longer term view that makes sense for most people.
Yeah, I mean, as I say, I don't mind switching it on and switching it off. I've done some trading competitions, and obviously over the years done a lot of day trading, and that stuff's great if I've got like absolutely nothing else to do and the market's really buoyant. But trying to force it. So FX traders, don't get me wrong, have had a great time of it lately, but well, not necessarily FX traders, but particularly traders who like to go from level to level within a range. I mean, for those guys, it's been like quite nice trading conditions. But for longer term swing trades and trying to get into a position, unless you've been catching the lows and sort of holding, then it's been quite tricky, particularly given that the market itself has actually it's the dynamics changed somewhat. Bigger institutions coming in, a lot more money.
Yes.
And also the cycle kind of fucked up a bit. We kind of went off,
Right.
bolted off. Well, we were on track along the lines of my sort of 12-month forecast that I had. Then COVID happened, so then we were behind where we should be by miles. Then we sort of massively got ahead of ourselves versus the
Yeah.
previous cycle in some crazy
Yeah.
way, and now we're sort of like around about where we should sort of be. But all of
Right.
that in between, Elon, like, Arnold Schwarzenegger, the Pope, everybody with a mouthpiece has been sort of poo-pooing Bitcoin, and for whatever reason they could sort of imagine, the Chinese and stuff as well. So I think it is good to sort of have you on and get someone with a high bullish conviction with many different reasons to take us through. So I think
Yeah.
it's probably a good time for me to just pass the screen over to you.
Okay.
So you should
Yep.
just be able to share now, and
Okay.
should be good.
All right. Can you guys see?
Can, yeah.
Yeah. Okay. Cool. Yeah. I guess I'll start off kind of giving my overall bullish thesis and why I'm so bullish on Bitcoin going forward. So kind of like when I first got into Bitcoin, my overall thought was that Bitcoin was pretty binary. It was either going to zero and this wouldn't catch on, or it was going extremely high. And part of the reason for that is just, I mean, it has a lot of network effects and the obviously the supply constraints. So when you have ever increasing network effects similar to the internet, and then you have decreasing supply over time, eventually, capping at 21 mil, the price is just going to go up naturally. I mean, that's literally what Bitcoin was designed to do, is go up in price. And also when it goes up in price, it draws more people in. So it's kind of like a very beautiful aspect of the invention. It seems so simple, but I mean, that's a huge part of it for me. So moving on from like the supply demand aspect, overall macro. So I think macro is pretty much driving every investment currently. And what I mean by that is, if you guys are familiar with Ray Dalio, he kind of has a pretty neat video about the long-term debt cycle, and what that is basically is, so eventually interest rates over time are manipulated to kind of increase the spending in the economy. So if you lower rates, then it gets velocity of money moving more. You have more people wanting to take loans out for businesses and so on. And so generally, if there's a recession, they'll lower rates. But eventually, they do this so many times over the years, every roughly eight to 10 years, there's a short-term debt cycle. And then the long-term debt cycle is when the rates go to zero and they can't be lowered anymore. So what does that do? It basically means that they can't stimulate the economy anymore, so they have to start printing money. So, I'm sure you guys are familiar with QE and all that. I guess probably different terms compared to where you're at in the world. But so right now, the U.S. federal debt to GDP ratio is 130%, and there's been 51 countries that have gone to this level, and 50 out of 51 have either implicitly or explicitly defaulted, which is a pretty staggering stat. So basically what that means is currently the United States is in a situation, it's pretty precarious, and the only way they can get out of this is by basically inflation and having real rates as extremely negative. So when I say real rates, it's just nominal rates minus inflation. So right now, I think nominal rates for the 10-year like 1.2 or so, and then inflation has been 5-6% CPI, which we all know that it's way more than that if you look at M2. But so the debt GDP, so basically right now the easiest thing to do is they're trying to find people to pay this money. So they're looking for tax receipts and people that can actually pay this debt. And realistically, the debt that is owed right now is so high that tax receipts can't really pay it. So they're having to print more money to service this debt. So right now around the world, global debt GDP ratio is 400%. And what that means is if interest rates are at 3%, then if they rates are at, let's see, sorry.
So it's about servicing the debt, right? And you need to have money supplied to service the debt. And there's obviously a breaking point. I mean, just on one of the points that I've seen, going negative interest rates. I don't know if you've seen, it was at the IMF who was sort of saying that was it the World Economic Forum? I can't remember which. Are they any different? Who knows? But it was saying, in the future you will have nothing and you will be happy. You'll own nothing and you'll be happy. And I just think of the fact that, as interest rates get sort of towards being negative, you're being paid effectively to take on debt. And like, obviously that prospect is absurd, really. And what it actually means is that you're incentivized to own nothing other than debt.
Right.
Which,
and also, in regards to that, it's basically like new debt is created, or new money is created via debt, and so it's like they need more and more debt to keep this going. Otherwise, it ends with a deflationary collapse, So and Jeff Booth kind of talks about this too, and his whole point is that GDP rises over time, but if you have you basically would need 12% GDP growth worldwide to not have to print to service the debt. So it basically right now governments are insolvent on that basis, and they really can't do anything about it. The only thing they can do is print. And so what does this do? It basically pushes all assets up nominally. So everything really is going to explode in price continually because they can't do anything else. And historically, if you look at that 51 countries that have been in this situation, I mean, all of them choose to print money, really, because it's not politically feasible to just say, oh yeah, like we're going to choose austerity or we're going to choose to higher taxes. Those things don't really work. I mean, what does work is to devalue the currency over time and have inflation kind of like, rob people's purchasing power. So anyone in bonds is just losing money over time. And this happened in the 1940s as well. And that's kind of the playbook that the Fed is taking right now.
Right. So effectively, they're like kicking the can down the road for a later day, but it's becoming an increasingly unserviceable amount of debt. And also, part of the reason why they're doing it is because that's what you get taught, to do. When you go to learn about economics, the idea is you print more money, you create more output, and then the output yields the requirement to service the debt.
Yeah, I think the MMT argument right now is that governments can outgrow the debt, right? That's what they always say. That's the argument. Yeah. But I mean, if you actually look at the math, it's impossible, because like I said, I mentioned that debt to GDP ratio. If you're at 3%, which it's worldwide, that's where it's at. I mean, they have to increase GDP by 12% a year, which even in growing emerging markets, you can't get there, So they basically have to print money to increase the GDP. And also another point I wanted to make is, you've heard like Travis Kling and some of these other guys talk about how stocks being up, equities being up is a matter of national security. And part of the reason they say that is because, tax receipts and it are based off of, the feeling that, oh, stocks are up, like I can spend a lot of money, but also like if there's a huge percentage right now that of tax receipts that are based off of equities being up. And so if those go down, the tax base goes down, and then it's like you're even more insolvent on a math basis. And so the bottom line is they really just need to keep printing money. The Fed postures a lot and say, oh, we're going to raise rates, or we're going to taper, or all this stuff. But realistically, any type of tapering they would do would be a huge policy error, in my opinion, and they really can't do it. So what does that mean for Bitcoin? It basically means that there's a lot of money that's going to be continuing to come in the world, and while you're having all this adoption and supply, so it's like the money has to go somewhere. So, and Bitcoin is the fastest growing asset in the world, and eventually, a lot of that money from bonds is going to be put into Bitcoin, in my opinion, as well. So right now they're at, bonds, I think there's 17 or 18 trillion negative yielding debt, and that's on a nominal basis, not even a real basis, whereas pretty much everything is negative. So anybody that's in cash right now or bonds is just losing on a real basis right now.
Yeah, but I mean, to some extent, that also shows you just to the extent at which they are actually concerned about inflation if they keep buying them, and it's pushing yields that low. Obviously,
right. That's the thing is, the Fed is kind of capping the rates, because also one point I wanted to make is if rates continue to rise, then the government can't service that debt. I mean, like I talked about earlier, it's impossible. So they basically reached a point now where they can't allow stocks to fall, they can't allow rates to rise. I mean, so we're basically at the point in the cycle where they can't allow any of that. That's the reason why their response was so great to COVID, is because, the Fed and the government went through this 2008, and they know that they had to print quickly, otherwise it would basically deflate quickly, and nobody wants that. They really don't have a choice.
What would you say to people who think that I'm going to put on my tinfoil hat here? I like to do that sometimes, and I know you're actually quite. You don't really entertain too much of that side of things, do you? I think you're a bit more level than that.
I do occasionally, I mean, we have some friends in some of our groups that are a lot more like that than me, but I think it's good to think about the other side.
Yeah.
Go ahead.
So let's say that it is a conspiracy, right? And the COVID and all that sort of thing came along intentionally to do something to do with what they're referring to as the Great Reset. I think they actually refer to it themselves, themselves as the Great Reset. How would what they've done enable such a great reset to occur? I mean, is it even if you were a conspiracy theorist, is this going to be what you would do? It doesn't seem that way to me. It doesn't seem to do anything other than just accelerate the problem, which I'm not too sure why you'd actually do that.
The IMF, has said basically you will own nothing and you'll be happy or something, which is completely ridiculous in itself. But I don't know. If in regards to COVID, I mean, obviously the response and the lockdowns, in my opinion, have been a little bit too much. And I mean, right now with the Delta variant, they're pushing it extremely hard in the mainstream media here, and I'm a little skeptical of that just because deaths at the moment are still down quite a bit. But I think they need a reason to continue printing, because if they were just to print and there's nothing going on, the economy was humming along, people would start asking more questions. But if there's a crisis, then everyone yes. Oh, well, that makes sense. Like, yeah, we're in a crisis right now, so you need to print money to take care of that. And so I think that that's a big portion of what's going on currently. I'm not sure about the initial response, to COVID, but I think that the latest Delta variant scare has a lot to do with it, in my opinion.
Yeah. It's certainly very compelling that actually there is very little levers left to pull, and as you say, increasing rates. I mean, certainly in the UK, the house prices have just been continually going up, particularly now outside of London as well.
Yeah.
Helped along by the sort of work from home and the sort of decentralization, if you like, of the requirement to work in the office. So, I mean, if you were to increase it, interest rates used to be like, between 10 and 15%, like 40 years ago or something, maybe 30 years ago, I don't know. And now they're effectively zero, or you can get a mortgage, let's say, for 3%, fixed for 10 years or something. I mean, if those guys on variable rates were to see their, let's say they've got just for round numbers, $1 million house, and almost all of it is debt. At 3%, they're paying 30k a year. But if you sort of 4x that or 5x that, like that's just starts pushing it to the realms of like everybody going bust. And we're definitely getting towards, you can see that there's just where can you go? There's nowhere to go now, is there?
In terms of like where you're putting your money, you mean?
Well, in terms of like, you can't increase interest rates because if you do that, you blow up the economy. The businesses that have taken on debt can't service the debt. The people who've taken on mortgages can't service the debt. The governments can't service the debt. Everybody blows up.
Right. Yeah. And so that's where we're at right now. They're just continually trying to kick the can, and honestly, I can't blame them. I think this road was set a long time ago, and like Powell, and I don't know who's the head of the. Well, I guess Lagarde and is the ECB, and then whoever is the head of the Bank of England. But I think all this has been written in stone for a while. Like they're basically going to continue this until the dollar or the euro is devalued on a real basis. That's the only way they can get out of this. And to be clear, the Fed is kind of walking a tightrope at the moment, and so they don't want the dollar to drop too much, but also they want the economy to do well. And so they're kind of choosing between the dollar and the economy, and generally they choose the economy. So yeah, that's kind of where we're at. But the interesting thing is that I can talk about a little bit too is as far as an investment thesis, so where do people mostly put their money now? I mean, bonds are extremely high. I think it's the most liquid market in the world. Equities is up there, obviously. Real estate, gold's smaller, and like art. So the biggest problem with all of this is with bonds, they've been very low the last 10 years. So even like on the 30-year note, anybody right now they've been getting a bond that pays out below probably 3-4%. So if rates rise above that, then they're going to dump all their existing bonds to chase the new bonds. And so what that does is premiums on those old bonds are going to fall precipitously, and the Fed can't have that. So that's why they've been buying, I think, 120 billion a month of bond purchases and equities. And then also what's kind of interesting is the equity market. So like bonds are the risk-free rate, and then the equity market is based off of the risk-free rate. So the EP ratio. So what happens if rates rise to like 7%, then equity prices from a fair value standpoint are going to fall 70 to 80%, which most people don't even realize or think about. So it's kind of like, where do you want to put, where do you have to go? Where do you have to hide? Real estate, would be an option potentially, but there's also a problem there because right now everybody, at least in the United States, thinks about in terms of payments. How much, monthly payment can I afford? So if rates lower, then they can afford a higher monthly payment at a higher house price, and that's kind of what is pushing up these housing prices, But uh, also one of the problems I have with real estate is it's subject to taxation, changes. So I've looked at all this stuff over time, and that's kind of how I've ended up with Bitcoin. My dad was gold bug, and gold has its utilities and makes sense, but Bitcoin's obviously way better. I actually kind of wrote a paper about why all the different things that it is better. But I guess long story short, there's a lot of issues with macro. There's a lot of reasons why Bitcoin is extremely undervalued. And so overall, I think Bitcoin is the place to be, at least in terms of a portion of your portfolio. I mean, if you get older, if you're older, your 70s or 80s, probably less than 5% still makes sense. But if you're younger, then I think you probably want to push it in terms of Bitcoin ownership.
Right, totally agree. I guess actually we didn't do the part where we ask you sort of how or why you got into Bitcoin. So I guess we've done the why.
Oh,
So do you want to maybe just like give
yeah.
us your little story about how you got into crypto? How long
Yeah.
you've
So
been doing it,
my
and
background is kind of, so I went to engineering school, was an engineer for a while. Like I said, my dad was a gold bug, silver bug. He did quite well leading up to 2011. Um, And so I really didn't start having any money to invest, or didn't start investing until around then, 2012. I basically had no interest in economics, no interest in politics, no interest in anything, of the sorts. But I think after 2012, I kind of realized, hey, I have some money now. I'm working, and I have some money to invest. And so I started talking to my dad. And I basically, I'm sure it's kind of with you guys too. You basically look for someone that has invested before, or it kind of rubs off on you. So he was a gold bug, and I started buying gold in late 2012, and that was obviously not a great time to do it. but I didn't really know much back then, so I was kind of just copycatting my dad. But then in early 2013, I started hearing about Bitcoin more, and I was like, "What's this thing? It's interesting." And so I started doing a lot of research. I was trying to figure out where I could possibly buy it, and then I ended up, buying some in 2013. Luckily, I avoided Mount Gox and ended up on Coinbase, thankfully. But that's kind of when I first looked into it, and I didn't really know as much about as I do now. But that was kind of my thesis, was is that, like, this is digital gold, and it's either going to catch on or it's not, And so I bought some back then. I kind of rode that the first bubble. I made a little bit of money in the rise up from 100 to 250, and then from there I just started kind of buying more of the summer. I was in Taiwan for work, and then I had a little extra spending cash, so I started kind of putting more money into Bitcoin then. And then the whole run up to 1200, I basically like didn't sell anything because I didn't know what I was doing, and so I was a complete noob. And then I basically held it all the way down, and I was buying more as well. And I kind of had the thesis, well, this seems interesting. And I actually had one of my roommates back in 2014, I think, paying me in Bitcoin for rent, so that was kind of interesting.
but that was a good payday of rent, I guess.
Yeah, yeah. So it's kind of funny. He's like, yeah, that rent I paid you back then is now worth, so much. It's thousands of dollars more. So it's kind of funny. We kind of joke about it from time to time. But yeah, I started kind of getting into trading, I guess in 2014. So I was on Bitfinex, and kind of learning about trade back then. And I was just trying to learn as much as I could. So I guess you kind of call me an OG, but I was always kind of a Bitcoin maximalist, and still I am to a degree. But I do think alts can offer good utility from time to time, and they also are interesting for making money. I think they outperform in bull markets. So
And how did you go from trading just for yourself, or like being involved in the fund?
yeah, so I kind of continued to learn and trade. And so I was working as an engineer in up to 2018. And then I did pretty well with everything trading and just investing fairly early. And so I decided I was going to take my chances and basically quit engineering work and try to trade full time. And, this was in the bear market too that I quit. So at least I didn't, quit at the top and lose all my money. So, yeah, I started doing that. And then I had a friend, Trey, that I joined in a group with, a Telegram group, and we became pretty good friends. And about 2019, he said, "Hey, I have a network here in Nashville. Do you want to come meet me and my partner? And I think you're a really good trader. Do you want to come and trade for us? And we'll see if we're a match." And so I met them for breakfast and kind of headed off. And then I started working for them last year. And then one of the guys ended up leaving, partner. So I ended up becoming partner at the beginning of this year. So
yeah, I mean, we did actually have Trey on.
yeah,
Maybe I don't know, 6 months, maybe it's as much as 6 months ago. So yeah, we got a bit of an insight into the fund then. Do you want to just like briefly describe the sort of type of fund you are, like where you are with raising, and then maybe just a little bit about how presumably you're trading with slightly more money than you used to, how that might have impacted your style of trading?
yeah, sure. So with the fund, we are basically like a long only fund. So kind of the thesis Trey gave to a lot of investors is, here's our investment thesis. Here's where we think Bitcoin's going to go up. It follows 4-year cycles after every halving. And, he basically said, give me some of your money to put it in. Like a lot of these guys, didn't really know too much about crypto. And Trey had been kind of talking about it. I think he was in 2013 as well, 2014 in that range. And so people have heard over time and say, "Oh, maybe you're right. Actually, like this stuff keeps coming back. It's not, back from the dead. It's not quite dead, even after losing 85% 2 to 3 times." And he said, "I think we're going to have a big run this year. I want to take some of your guys' capital and grow it for you. And I think you should have an allocation to Bitcoin." And so, we are mostly focused on being long in the upside here. And it's interesting because I guess some of the differences let's see. So one of the hardest things, I guess, with capital is we kind of raised in different tranches. So we had an initial raise, and then we raised more. So the initial raise was back in, I think, January of 2020. And then we went through the whole COVID crash, which was extremely, taxing and difficult, being kind of a long only fund. And then we were able to raise some more capital around 12K. And then I think we had 2 more raises we've had. So we're done now, but every time you get money, it's like with the fund, it's interesting because it's like you're getting it all new. You either have to put it to work, or you have to say, "Oh, well, this could be a potential cash drag on the fund if we don't put it to work." And so it's almost like you're trading it initially. You get a chunk and you have to trade it.
Yeah.
So
yeah.
so that's a very difficult aspect that I really haven't had to deal with before. So and also what's kind of interesting is from a psychological standpoint, people want to give you money when the market's up. They don't want to give you money when the market's down because they're scared. And so that whole psychological aspect is in everyone, and it's everyone kind of feels that. And so we had to learn to deal with getting capital when the market's up. So when it pumped up to 12K last July, we had a raise. People were interested. I think when we had the initial run up to 30K this year, we did a raise, and then we did one last raise in like when it was like 40Ks. So yeah, that whole aspect and needing to allocate that money and find out what the best way to do with it, whether to hold in cash or put it to work right away is definitely an interesting aspect. And so that's something I hadn't delved before, and had to learn how to kind of deal with that aspect. So
I must admit that is exactly the same problem. When I've been managing money that I've had as well, is that
yeah,
okay, I've got money. The expectation is that it starts work today or yesterday, basically. And of
yes,
course, when the market's just running away and it's very unforgiving,
yeah,
you become prone to making errors because of that sort of introduction. They didn't get in at the bottom, so yeah, you have to get it to work. So I mean, I've talked to Murad as well when he was
yeah,
running his fund, and he's I was trying at the time, I was trying to ask him, how are you managing with it, and he said the exact same thing, that the worst time, the most probable time you're going to mess it up is when you just get given a load of money. So have you
yeah.
found any particular ways of managing that, or is it just a patience game?
Well, I think one of the things we've learned is when people are wanting to give us money, it's normally close to the top.
Good
Just from
signal.
a psychological perspective. And so that's one of the things is be careful with that. And if you do want to put it to work, maybe like have a stop loss or something, you with the spot that you're buying, just because it's a little bit more risky at those points. And so that's, I guess, something we've learned.
You
Uh,
should
and
you should make an indicator for us, Steve. When you get loads of people giving you money, then we'll start cashing out.
yeah, we kind of joke about that from time to time. Is that every time like, oh, okay, well, this is great, we're getting new money. I mean, that's the point of the fund, is to grow the fund through capital, and also do well with investing. But it's also we've learned that now over time, especially. So it's interesting for sure. I guess you asked me about how I kind of trade differently. Trading with a little bit more money than when I initially started with. I think the aspect back then was like, yeah, like this is kind of a side gig for me. Trading with margin, it was, this is all upside. Like if I don't do well with the margin, I still have my day job. Obviously, like now I trade for myself, so it's like I had to be very selective with my any margin that I use. Also, like I said, it's just I trade with more capital now, so it's just easier to do positional trading. So what I mean by that is I follow the 4-year cycle. I think it makes sense, and the reason it makes sense is from a mining perspective. So what I mean by that is typically when the price is going down, miners are more likely to shut off, because it doesn't make sense from an electricity standpoint to keep your miners running. It's you're basically losing money by mining it. So any block you get is going to be worth less than the electricity you're paying potentially, and that doesn't happen very often, but it does happen at the bottom. And so I definitely kind of follow that aspect of the market. I think it's Capriola. He has some good indicators in regards to the hash rate and the hash ribbons. And so like what I found is anytime there's like a difficulty adjustment, a big difficulty adjustment above 10%, or there's been a big drop in hash rate, like that tends to be the bottom. And also, so I think what happens over time is after the halving, there's the supply shock. So I did a big Twitter thread about this, like around the halving last year. And so after the halving, there's a supply shock. There's less coins that are going to miners, so there's less coins on exchanges. There's less coins being sold overall, and it kind of makes sense. So what happens is if there's less and less coins available, then it's the supply demand imbalance that I was talking about earlier, where the price has to go higher to find an equilibrium there. And it's really interesting because Bitcoin is very reflexive, and what I mean by that is anytime the price is going up, people want to pile in. Anytime the price is going down, people want to get out. It's just it's one of the most reflexive assets on the market right now. And so as people see price going up, like that's when they want to get in. They don't want to get in when Bitcoin's down at 3K, or Bitcoin dropped to 28K. And we saw this even with the fund. Like we try to get more additional capital. We had, I think, 2 people that gave us additional money. We said this is a really great time to buy. Like we still see this as mid-cycle, but it's just kind of the way it works, the way the psychology works. So that's definitely an interesting dynamic.
Yeah, I guess that's why. Although again, it's against kind of every bone in my body sometimes. Buying the all-time high, that's why it's not that much of a bad idea, right? Because
Yeah,
that's what people are often waiting for as it's going up. And
right.
if you get that confirmation it's going up with volume, particularly like we saw at 20k and then it shot off, that was the time to sort of go all in if you hadn't before.
Yeah. Well, yeah. That the interesting part about that is with the fund. I remember, so we made a pretty big move from 10K to 20K. With really, like, I think it was on the 3-day chart. There's maybe one red candle in the that go. So we actually sold a little bit to cash around like 19K. And my thought process was, well, we're either going to get a big dip here before we break 20K, or we aren't, and then I'll just put like a stop buy, at 20,000.01
Yeah,
cents or something. So
yeah, yeah.
that's what I did. And I'm glad I did because, the market really ran after that to 42.
I vividly remember speaking to both you and Trey at the time, and like all of us were having like sleepless nights. We're basically like sweating, like, are we in or are we out here? It was crazy.
Yeah. And that's what I said, this is going to be a big spot, but I was like, if 20K breaks, like, I think it's just going to run and I ended up being right. But, that's the thing is Bitcoin always goes higher than people think. And I think we're going to see that too coming up in the coming months. So I guess maybe that can kind of segue into like some chart stuff if you want me to talk about that a
Yeah,
little
I
bit more.
just have one final question for you.
Yeah.
So I'm not asking you about leverage on a particular account because obviously there may be things like counterparty risk and stuff. But if you
Yeah.
look broadly across your portfolio or the funds that you're managing, if there's a particular strategy regarding leverage, to what extent would the whole fund be leveraged? If you've got 100 in there, like what would
Yeah.
what would the total portfolio be? Would it be like 120, 300? Like how big's that position going to look?
So I did a little bit more. I was a little bit more aggressive at the lower 9K, 10K in that range. So I was trying to gain Bitcoin via margin trading for the fund. But yeah, we wouldn't really ever be more than like 20% leverage. And really what it comes down to, it wasn't more in terms of that. It was more in terms of a risk standpoint. So I wouldn't really risk more than 1% of the fund on any trade. So, I always tell Trey, like, the only way you blow up in this game, the only way we're wrong is if you blow up on margin or you get hacked. So we put a big emphasis on security, but also a big emphasis on, managing risk. So I'm like kind of like the lead trader. I make the overall decisions on what we're going to do with our portfolio and any margin, but also like I'm the risk manager too. So I think almost from any perspective or for anyone, the biggest advice or the best advice I would say would be manage your risk, because if you're out of the game, like, you can't make money. If you blow up your account and you're bullish and you blow up your account, well, you're done. There's the only way you can get more money in is if you make money in a job or whatever. And so I would say, like, think about that aspect when you're trading, or especially if you're trying to do margin. I'd almost plead you, like, just manage risk. Know what percentage of your portfolio you're putting at risk, because what will happen is you will bargain and for being right. And say that if you were long 50K, and if you don't have a defined stop loss, or you don't have a defined point when you're going to get out, what you will do from a psychological standpoint is bargain and say, okay, yeah, like, I think, all these indicators are saying we're going to rise, all this on-chain metric stuff is saying we're going to rise, all, everything. But the thing is, yeah, all that stuff's great, but if you're wrong, I mean, you can't make that money back very easily. I mean, I think you've probably seen this chart where it's like, if you lose 90% of your portfolio, well, you have to make a 900% gain to get back even, which is
Yeah,
a crazy
yeah,
thing. So that's a huge aspect of it that people don't really think about. All I think about is getting rich, where it's like, this
absolutely.
is a long game.
Absolutely, and if you take into account, the chart that they, or the sort of like matrix that you're kind of describing there, if you take that alongside the fact that your collateral's going down in value as well, it just gets even worse. Particularly if you're carrying a debt in USDT and your collateral's going down. As I say, like, it compounds the problem,
Well,
especially
that's actually the
if there's
big, yeah.
interest.
And that's what I'm going to show you real quick here. So I think what happened last year is, obviously we had, the 6K bottom drop out. We had the accumulation range in here, kind of higher lows. Then we had the big rip at the beginning of Q2. And then I think a lot of people tried to short this level. And so from a psychological perspective, they kept trying to short every rally. And that's like, you can kind of see with the funding and stuff here. It was extremely negative all down here, similar to what we have now. And then after we got the rises in here, people kind of flipped at the top, and then funding went crazy positive. But you also had that issue here in COVID where, like, BitMEX was huge at this point, and they were based in Bitcoin as collateral. So what happened is, anytime you started getting, like, say you were long from 10K here. Well, the problem is, if price drops to 5K, say you're 1x leverage long with $10,000 at 10K. So the problem is, using your Bitcoin as collateral in here. Well, if it drops to 5K, that means your collateral is 5K instead of 10K. And also, so you're also, if you don't have a stop loss, that means you get margin called at 5K, because you're not only collateral is down to 5K, that means you lost with the 1x you're long, you lost 5K. So that means, 5K minus 5K is 0. So that's what happened. If people were 1x long or 2x long on this move, well, it was cascading margin calls through here. We kind of saw that at the 40K to 30K range here. But this is the thing, the convexity here, like, people don't think about that, So that's what created this huge spike when people were bullish going into the halving. And then after that, people's sentiment has basically flipped, and they kept trying to short every rally. And so that's what kind of kept pushing us up every time until we got to here. And that's when funding flipped again. So I really like to look at funding, because it kind of shows you, like, what's going on with the derivatives market and what the market's sentiment is thinking. Because as a trader, like, I really think sentiment is a big deal. And let me talk about a little bit about that here. So I think kind of what happened is, sentiment was so positive all throughout here. You saw it in funding, you saw it on Twitter, people were euphoric. There was, meme coins, Doge, dog coins, come rocket, like, whatever, all these basically jokes of coins that were going nuts. And people were trying to long every move up. I mean, you see this in the funding below, like, every time it tries to break 6K, funding would go to, like, over 0.1. And so, that's a problem. And so all these people got washed out. Well, eventually then, like, all these people got washed out, and then there was just limit buyers. So there was limit buyers here sitting at 30K. There were at 28K was the yearly open. And so I think there was people kind of lined up to buy that. If you look historically back at yearly opens, they are really strong support, resistance, and flips. And so I said on Twitter a couple weeks ago, I was like, it's very important that we hold this, which we did. But I think what was happening here is, after all the China FUD and then they made miners leave, a lot of people in Asia were fearful. And so they were selling out of fear. After this forced liquidation, people were fearful. So they were just selling every single bounce, and so you kind of had, like, this little trend line going through here, and every time it got to, like, the mid B band, it was kind of like getting rejected, besides this, one-off pump here. But, and so there's two ways to make people sell. So I think you were looking at it in terms of whales. There's forced liquidation. So whales knew that, below a certain point, they did the calculation in terms of the margin calls and knew that there would be forced liquidations here. So anybody trying to get liquidity to buy would be having resting bids here, limit bids. And so they bought this up. But then after that, what is going to make you most likely to sell? It's the slow, drawn out down. This is just basically demoralizing from a trader's perspective or investor perspective. I mean, it hits everybody. Like, so I don't enjoy it either, but I know, like, from a psychological standpoint, that I need to trade opposite of my emotions. So what I kept saying in here was like, I think this is a point to this range is to buy, and so we actually ended up getting some call options this day at the bottom. So we had scaled on some early, but we got a lot more call options at the bottom here, which I'm pretty happy about. So that's kind of what we did, I guess, from a margin perspective. Too, we hired an options trader as well, so he's been helping us out with that. But that's kind of where I'm at. So
yeah, I guess I think one of the questions someone had asked previously is, I mean, I've obviously got my view, but why on that day did you decide to use call options rather than, let's say, assign some capital to a leverage account and leverage instead?
Well, the real reason is, I mean, we recently got our the ability to trade kind of overseas things, and we hadn't sent any money to FTX yet. So we were leverage trading on Kraken, but I'm not really a big fan of kind of what they've done in their liquidity there. And so we decided to kind of quit doing that. But like I said, this would be a good spot. I did say, like, to Trey, that this would be a great kind of spot to get in. The risk reward is very high. I was telling him at the time, well, it's like, keep buying support. If you look over in this range, well, there was three things I was looking at. Let me run you through this real quick. So I'm a big fan of Fibonacci and fibs and all this stuff. And so what I was looking at is, if you go in here and you do the extensions, you can see that, I don't have this in here right now, but the base, like the 361 or whatever, this is like kind of where it was resistance. But this had come up and broken the 1618, and then broke the 2618, and then it was basically holding support at this level. And then, so since then, there was this as support. You also can redraw this from this level too. So if I go from here to here, see how that matches confluence in there? And these are all, like, basically perfect. Like, a lot of this Fibonacci and all of this stuff is just math, and so it ends up, like, kind of almost freakishly scary accurate, in terms of where the levels are, and then confluence, even from drawing it from different points.
Yeah, I mean, fundamentally, all it's doing really is kind of, the participants in the market are kind of thinking, okay, well, I've made this amount of money having bought here, and it's gone up this much, and that, or, oh shit, the price is, I sold the top or around the top, and prices come back, over half what I bought it for. So the probability of increasing, increases in terms of buying, doesn't it? So it's just really epitomizes it. It's kind of part of what you said before, market emotions. That is the market emotions based on these sorts of basic math, as you say.
Yeah, so let me take that off. So you can see the 50 here. That's an interesting, basically kind of like support resistance line. So every time in the past where it's the first time it's touched the 50, it's always bounced. So like this started this bear market, it hit the 50 weekly moving average, bounced. here it bounced twice from this level. And then also if you put on, let me put on the 20. I like to look at the 20 as well. So this is like kind of like high time frame, where are we at? So basically like what I've gotten, and every cycle is different, but generally you want to be above the 20 MA. You definitely want to be above the 50 MA because you lose a 50, you're pretty much definitely in a bear market. And so you kind of see like how it tracked here back in 2017. I think everyone thought it was going to be the same. But then when it broke, this was kind of confluence up here in terms of the level. So this broke and, went down to test the 50-day moving average and it bounced off of that as well. So I kind of try to look for confluences in the market. One of the biggest things I like to look at too is overall data set. So one of our employees that we have basically like exclusively does data, and I have them run different data sets. So actually, Philip, I think one of these is your indicator, but it's the distance from the 20 week.
Yeah.
Yeah, and so I like to look at this. I ran the distribution and I figured out like the point we were at the other day was really like, I think it was 2% low days, which means like this never happens. So that says to me is like, that's a buy, because you need to think of it in terms of like a rubber band. So if the WMAs, moving averages, are rubber band, well, you get stretched to the upside, you can also get stretched to the downside, and that's when you kind of want to think about selling. And I think that like these are actually better for the downside because as you can see here, every time it reached this level, like it's been great support, or at least going to bounce. So I look at that, and then I also look at the 1 day with the 200 average, so basically like the Mayer multiple. So this I think was 6 to 7% of the low. So like it only happened, we only get this low below the 200 day 7% of the time. And so I was looking at that as well for a potential bottom, and now you can see we're getting closer to that. So I guess in terms of a PA, I pretty much look at price action first and foremost. And I was kind of like looking over here. So I like to view liquidity. So I see all these wicks as potential like big buyers that got left that can get their fills in. So, I was looking at this and really I was saying that if this 27.8 level goes, that's not going to be good because that's basically like the yearly open as well. I think at that point we could have fallen down to 20K, but my base case was buy support, and then if this somehow like flips resistance, that's when it gets kind of dicey. But you had so many people bearish recently, and the reason is because like this price action just looks horrid. But I was saying to the guys in the fund, I was like, go back and like look at the different bottoms. I mean, it's kind of like it's always darkest before the dawn. I mean, who wants to look at this chart and buy, if you see this candle? But the thing is, it's like, this is when you need to buy, like if, and you have to look at different things, different indicators and figure out how far the band is stretched and so on. And obviously use risk management, but, that's just something I've noticed. So I guess overall in terms of PA, kind of what I'm looking at is this level. So 45.46, this is 200-day moving average. If you draw the 20-week moving average, which is important for Bitcoin, it's roughly at the same level. So we also have, we're still in this range here. So if you draw this resistance, you can see really that there's no daily closes above this level. So if we get a daily close above this, we're basically going to go up for sure to test 44.6. I think we probably will break those levels, especially if we end up going sideways more here. So you kind of talked about at the beginning of the recording that you kind of see like something like this or whatever. And at that point, I think you might see the MAs kind of draw down to 41-ish.
Yeah.
I think, I'm overall bullish. I think we're going to see a higher high than 65K. I think we're mid-cycle now, looking at a lot of the on-chain stuff and just like the overall macro. I think, nominally assets are going to keep going up. I think the sentiment is too wrecked right now to not go up. Basically, I mean, the thing I would be concerned about is if we got to like 46 or 45, between 45 and 50, and you see people just piling in longs and so on, like that would be concerning. I think if we have funding continue to be negative, it's possible that you could just, kind of blast off in this range. So I think it would be kind of good if we did kind of hang out and do a bit of accumulation. So one of the analogs I was looking at here was down here. So you see how this did like the quick spike down, basically here, and then it rallied up, and then it kind of like the slow burn down. And I'm sure you remember this, but
Yeah.
everyone was calling for
1K,
2K and 1K. Was that hyperwave?
yeah.
And so you kind of see this happen over time, like psychology. People just lower their targets. I mean, and even good traders, you see this too. They will continue to move the target. So, what you saw here was you saw buyers just sitting. People were willing to sit and buy the 33 or 3,300 level, and you just had people continue selling until there was enough buyers, like where sellers just got exhausted. And actually what you can do is you can do the ghost pattern or the bar pattern and overlay it to its current spot, and it's almost like 100% similar PA. So I just move this over slightly.
It's always tricky, that, isn't it?
Yeah.
But yeah, that most recent slow grind down, I mean, of anywhere on the chart in the back of my mind the whole time was that particular part. The thing was, it actually, versus it did come a bit lower, than
Yeah.
because
Right.
I shorted effectively on that basis. I was like, nah, fuck it, it's not that, so I'm going to short it. And got out thankfully before obviously we ripped back up.
Yeah.
But yeah, the PA feels particularly similar. And the sort of what happened next for those who weren't around then was that next bit of price action. It was just slow grind to the upside on negative funding.
Yeah.
And eventually obviously it just popped off.
Yeah.
Which would be ideal. And I think, we've talked about this before, and it's certainly something that I've been thinking about as well, is everybody wants to sell that like 50K in the same way they wanted to sell that 6K, right? Is to get out.
100%. That's, the biggest thing is like, what are people with big pockets trying to get you to do? They want you, I mean, it's extremely hard to push the market out when everybody's bullish. So if you think of it in terms of who the buyers are and who the sellers are, like I think about this all the time. Like when everyone's bullish, who else is buying? No one. There's no one left to buy. And I think maybe Feldman did a pretty good point on this, but he was saying, if you break this level, you're gonna have a lot of like Wall Street momentum traders jump back in. You're also gonna have people that want to sell this level, so they might be shorting. So those are potentially forced buyers higher. I mean, it would not surprise me, especially if you get some more sideways in here. If you pop up to 50K, you have a lot of people shorting, funding goes negative again, and then you start to rip up, and then you actually have people pile on, like, because the media narrative gets going and so on, and then you have the second kind of half of this bull market. That's actually kind of what I'm expecting. I would say if anybody who's looking to hedge or looking to, hedge their bets, I would do it probably around this. So if you run the Fibs, I'm a big proponent of looking at the OTE. So, this is kind of like an ICT thing, but like it's between the 61 and 78 Fib retracement. And, I think if we were really truly bearish, I don't think we're going to break 50K. So, but I do think we are bullish, and, we will get through this eventually. How long it takes, I'm not sure, but this is kind of what I'm, looking to see is we break up either here, and then get rejected at those levels we were talking about, and then come back down, or we do more of a sideways accumulation below 40K here on the upper range, maybe 35 or 36 to 41, and then we go test this area, and this is kind of like the moment of truth area. If we can get above the 20-week and confirm it as support,
Steve,
then that's going to be a big sign for me.
Gents, I'm really sorry to interrupt. I am being kicked out of the office here because it's quite late on Friday, so I'm going to have to jump off the live stream, I'm afraid. But thank you very much, Steve, and I will catch up on the rest of what you're saying when I get home, when I watch the rest of the video.
Okay, yeah. It was good to be on with you. Thanks for having me. Yeah, sure. And then I'll just continue talking with Phil.
Yeah, nice one. Cheers, guys. Sorry, I've got to leave early. But
yeah, no worries, man. We'll see you later.
Thanks, Phil. Steve, if you just hit the undo button a few times, go back on the daily for a sec. Yeah.
Oh, the daily. Okay, yeah. Let's see. There we go.
Yeah, keep doing that. Get it so you've got the yellow lines back on the. Yeah, zoom in a bit.
Okay. Yeah.
And then move the top squiggle on top of the W, the right hand part of the W, yeah.
This?
The top, no, move that back where it was, yeah, and move the top bit along, yeah.
Which way?
That bit, another one. Yeah, something like that, when we get these sort of, that's what should happen, right? If we're bullish, we should get this shallower shoulder on the right hand side where actually everybody's actually desperate to get back in. They're sort of waiting for lower entries. It grinds up, similar to what we see here. I always find, like the inverted head and shoulders, which have got, more of a shallow right shoulder, tend to be the more explosive ones. Maybe we pop up, retest that sort of 47, 50K level, maybe retest the breakout. That would be the textbook inverted head and shoulders, right? And then pop off and reach the target, probably back up.
Right, yeah. I guess my scenarios would be, the quicker, so kind of like the quicker this moves up, if we did, somehow pop this range, if we go down to the 4 hour, it's kind of almost like painting an ascending triangle type thing here at the moment. It's like that's kind of in the resistance at 41K. So I wouldn't be surprised to break this down just because of how crazy this run was up here. But also, I'm kind of like 50-50 here, I guess, and I'm not really going to change my position much as it is. If we go down to 35 or 36K, like I'm pretty confident we at least test 45 to 50. So yeah, I guess that's kind of where I'm at currently. But yeah, if we do blast off from here, and then go straight up to this level, well, then you might get a potential sell off like a little bit further down. I've kind of seen that over time. It's like the more quickly some things go up, it's like obviously it's more chance that it'll retrace. But yeah, I don't know. I'm really fine with either one. I think in this scenario with the sideways, it would, if we do that maybe till like mid-September or so, that would provide a pretty good chance for alts to maybe do something. So that's what I'm kind of looking at right now in that regards. And one of the other things I wanted to touch on too is, it's kind of goofy, but you've probably heard me talk about this before. Like it gets made fun of a lot on CT, but astrology stuff. So you've probably seen me post charts of equinox and solstice dates, and how I've seen that like oftentimes that ends up being a pivot in the market. So the last one was, let's see, I think it was like June 21st or so, or 22nd. So you can see this here. That was the exact bottom this day. And I posted on Twitter, I was like, I'm pretty sure like this was going to be closer near the bottom, and then we're going to move up, for Q3. And then Q4 I see as being bullish. And like really you can go back and like look at these equinox and solstice dates. Um, and it's oftentimes pretty close to the top. So I think the last one was, yeah, like there. That was the last one. So just something to keep in mind.
But why though, Steve? Why does it
Okay,
work?
yeah, I mean that's a valid question, but I would say, a lot of this comes from Asia. So they are a lot more superstitious than the West. So, Asia is obviously a big part of this market. I mean, China obviously less so now, but they they view these dates as important, and so it's kind of like almost like TA. If enough people think it's important, and the market's big enough, then it becomes important, right?
Yeah.
So, that's why I guess the answer I would have. I mean, like I don't think there's any like weird type of voodoo going on here, but oftentimes I said like if it is consistent enough, I don't care what it is. If it sounds crazy, like I will use it.
Yeah, exactly. I mean, one phrase I like to use is it doesn't really matter why it works as long as it works.
Right. Yeah, exactly. And so the thing is, like, I've found some alpha in this, like that these are pivots and dates to be looking out for. So, the next one would be like September 20th. That's fall equinox. So like I say, like don't laugh at it until you've looked at it all and ran the numbers and the data and so on. And so, you can run back. I looked at my Twitter. I posted charts on this, but um, I think that even if we do kind of go sideways here, even from an astrological perspective, like breaking up here, maybe mid-August and then taking a pullback, if we do that, makes sense. And then you kind of, do a little reaccumulation here. And then, once you hit September, maybe you hit a higher low on equinox and you go up from there. I mean, last year, this is kind of weird thing. I won't go too much into it, but it's called Ghost Month. DJ Thistle's a buddy of mine, and he's posted about it before. But basically, this date and was the start of Ghost Month, and then this was the start of the Ghost Festival last year in August. So you can see like those are both top dates, and then on equinox there was a higher low here on this date. So this was last year. I think I'm expecting similar price action basically for Q4 this year, like as we had last year. We kind of go sideways basically for Q3. August is not normally a great month for BTC, but maybe we just go sideways accumulation and then we kind of take off into this. So that's my thought. Do you want any more questions about BTC, or do you want me to talk about alts a little bit now?
No, it's just good to see your view. I mean, I guess the key thing for me really is that you've got your direction that you're going. We know there's gonna be noise. We're not entirely sure exactly what's gonna happen, but fundamentally, you're positioning on the basis of the end of the line as opposed to trying to get too caught up what happens at the start. If you know what I mean.
Yeah. I mean, I legitimately think that Bitcoin slogan at this point is it's just getting started. I mean, it's what like 700 billion or something at the moment market cap, and I mean, I think there's like 900 trillion of investable assets. I mean, if you even get to 5% of the world of investable assets, like you're looking at like $2 million per coin or something like that over the next 10 years. I don't think that's unreasonable at all. I think that's even a little bit on the low end. It might sound crazy, but it's kind of like you got to think about these long-term investment, why you're in this investment, like, how much am I willing to hold if you can't handle the volatility, like just be less, have less of a portfolio. I mean, that's the thing is you handle volatility with position sizing. If you're worried about the volatility, have less of a position, have 5% of your overall net worth or something so you can handle it and you can hold this position. Like you don't want to, puke at the lows and sell like at 30K, when you bought at 50K or whatever. And
Yeah.
that would be like the thing is like look at the long-term picture and why you're in this.
And I think that is actually quite critical, and one of the reasons why the chart is the way that it is, and it behaves so similarly, particularly with things like stuff that's emotion driven or psychologically driven, like fibs and stuff, is just because when you go parabolically up, people go from, I mean, think, if you're accumulating at 3K, you've gone up to 60K, so you've 20x'd. And a lot of people were putting big bets for their like net worth down there, and for people to 20x the net worth, see the money go all the way up, and then to see it halved, it's no surprise you get the kind of emotional, like soul destroying price action. And I personally, I took some money off the table on the way up because I'd kind of achieved some objectives that I had, and for me to stay in any sort of sane sort of mindset, to deliver the probability of actually holding for longer and trading with things like leverage, which would mean that I could gear back up to the size I was at before. To give the most chance of success for that, I think you need to be considering how you're going to feel along the way and manage that process.
Yeah, 100%. And that's a great point, because like, say, like for me, I got a person who is, most of my net worth is in crypto and Bitcoin and so on. And so, but it's been like that for a long time. And because I've had the belief in it for a while. And so what I would say is, you need to, if you cannot handle the volatility, or you can't handle it, you need to know yourself. Like, you need to do a deep dive into your own psychology, and that you're gonna be greedy at the top, and you're gonna be scared at the bottom. Like that happens to everyone. I don't care who it is. Those human emotions are the most important part of trading, because in a normal situation, like say a tiger was chasing you or something, or a bear, right? I mean, you're extremely fearful. Like, you get that adrenaline, and that helps you in that situation. But opposed to trading, like, that doesn't help you at all. Like, you get scared and you want to sell, and like that, you need to basically trade against your emotion. So whatever you're feeling in the moment, if you're feeling euphoric up here for the last couple of months, take a little off the table, take 10-20% of it, because then you can buy the dip with it. And if it keeps going up, great. You're still, 80%, 90% invested. But you can handle the volatility. You have that in cash. You have that to live off of. It's a little bit more difficult for us as traders and so on, that don't have like another day job or something. So that's like a definite interesting mental way to look at it. So I agree.
Sure. So tell us about alts then.
Okay. So, I think alts are a good way to, basically gain on Bitcoin without doing margin trading. So if you're not into margin trading or don't want to do that, have some alts that have some upside. So, pick ones that have a good narrative. Because I think a lot of times alts are almost all about the narrative. You saw like back in 2019 with Tezos, like the staking narrative. Now, obviously, Tezos hasn't done anything since then, but like people are like, oh yeah, you're gonna get 5% a year by holding Tezos, and it was like the big thing on CT, and everyone was involved with that one. And then now with Ethereum back in 2017 was all about the ICOs. Everyone was in the ICOs, and that's when Ethereum made its huge run from 400 to I think 1400. And increased quite a bit. Let me pull up that chart. So yeah, I mean, you could just see it on the chart. And I generally think that with crypto, liquidity kind of flows downhill. So it all starts with USD, and then it starts flowing to Bitcoin, and then it goes into the second biggest, all Ethereum now, and then it kind of flows downhill. And then towards the end of like the mini cycle, you get to see like these small shit coins that it flows into, like Doge and so on. And that's kind of a sign that you probably need to pay attention to as well, in regards to like there's a lot of like frothiness. So I think right now, obviously the big narrative with Ethereum is DeFi. I think there's a lot of its interesting aspects to that, and I think that it's going to be hard for Ethereum people with DeFi, because I think we haven't really had any state attacks yet. It's kind of been ignored at this point, but I don't think like the banks and so on are just going to roll over and say, yeah, like you guys just take over the world with all this DeFi stuff. And there's going to be a lot of like the part where they fight you. So we're kind of, I think, getting to that point now in crypto. But I do think that there's some interesting things going on with Ethereum. They're supposed to be moving to POS soon, which I think is a bit of a mistake, just because I view proof of work as the invention, the real invention here, like the real big deal. Because I think Bitcoin proved in 2017 with the attempted corporate takeover that it's with all the different nodes validating the network, like the users control the network in Bitcoin. You're not going to be able to push people around with even if you have miners on your side, because they can just move to a different chain or fork or whatever, and so they had the soft fork that popped up, and eventually like the users said, no, we're not going to big blocks. And so I think that's pretty important. I think the problem you might run into with the POS stuff is proof of stake. Well, the bigger the validators are, the more, say they have in the network. And so I'm sure there's people that would debate on that, but that's just kind of my view.
I tend to agree. I mean, like, Bitcoin for me, the thing that really got it for me was, the game theory side of it is so almost, it's so beautiful. It should really be like, well, obviously beautiful mind is what I was thinking of as well, is obviously Nash who come up with game theory pretty much in there. So, it is the sort of thing you should be getting a Nobel Prize for, is coming up with such a brilliant game theoretical monetary system, basically, and whether or not it works on a proof of stake basis is open to debate, but it is like the gold standard.
Well, and I kind of find myself like going back and forth on this too. I mean, I do think there are valid things for Ethereum, and like it isn't an important piece of the crypto puzzle, and so on. And so the same with other altcoins, privacy coins. I mean, there's also NFTs that are being done now on Ethereum and so on. And so yes, those are important things, but I do worry about sometimes with the longer term centralization that could happen. Because I think we all have to look back and take a step back and say, why was Bitcoin invented? What was the big deal about Bitcoin? And it was basically to combat the state's control of money, And so being decentralized is the biggest aspect of that, along with the 21 million hard cap, to me are like the biggest components of why Bitcoin matters, really. Yeah. So, but I guess that's like more of a philosophical standpoint from each individual, and so everyone's going to have a different take on how much centralization or decentralization matters to them. But I think alts in general, though, still you can make, they're good for making money. So that's why I buy them. That's why I'm in them.
Right. Yeah, it's an interesting debate, and I think it's one that you'll never get consensus on, and as such, that's just the way that things are. And seeing all of the other coins get developed, a lot of the times the reason they came about is because you weren't able to do the dev on the Bitcoin network so easy, but by the same time that's what gives Bitcoin the resilience within the code that it has. So
it's very hard to change its core principles, and so like that's the thing, is like that's I think a positive point, but I think overall alts in general, like they're good to have around. Like there's a lot of good development going on there. Let's jump into the chart a little bit if you're down with that.
Sure.
Okay. So kind of what I'm seeing here is, we got the crazy run up in 2017, and it was the ICO. And then like kind of like this here was when Bitcoin was making its big move. And that's what I was talking about earlier, where if we see Bitcoin run from 30K to 200K or something like that, like I think you're going to see Ethereum basically react in a similar manner. I just don't think that alts can hang with Bitcoin if all the liquidity is flowing into Bitcoin. But then after we saw Bitcoin cool off, we basically saw the liquidity run downhill, like I mentioned before, and then we saw this big rally up here, and that's when Ethereum went to 1400. last cycle. And then basically, we had all these bag holders with ICOs and everything, and you had a dead cat here, but overall, it was just like you had to get rid of you had to capitulate, everyone one by one until basically you only had more buyers than sellers left. And so I generally kind of view this chart as like a big inverse head and shoulders. So like that's the shoulder, and this is the head, and then this is another shoulder. So it looks like a giant accumulation pattern. If you look at the ETH USD chart, there was a ton of buying, at these different times when Ethereum Bitcoin was lower. So, this is a bit of a Livermore cylinder too. I know you've talked about this too, on some of your channels and stuff, but we broke this to the upside. I mean, this was a pretty strong move here, and so it's not surprising that it's consolidating. So I mentioned that I like to look at fibs. So I drew the fibs from the top here to the bottom of the overall move. So as you can see here, that once it hit the 38 fib, also like there's some supply left on this side, that it got a big pullback. It's finding support at this lower portion of the trend line here. So I think it's getting close to the decision point. I mentioned with Bitcoin, I said, if we kind of see some sideways for the next month and a half, and I think you might see Ethereum break up here. So I'm kind of like, I was in buying all throughout here, lower and everything, and so I had to kind of make my position for the longer term. But if we lose this 53, 54 level, I think the basically downside is probably in the 0.038 range, or potentially even the start of the move, which is like 0.03. And so really I view this as like the important point to hold. And it would be great if it could hold like this trend line on the weekly as well, but it's going down to it's kind of squeezing on the three-day bands, V bands.
It is really tricky, right? I mean, just from my point of view, if you just step back from it, it looks like the most perfect chart ever, almost, for accumulation. If you throw on, I think, OBV as well on the daily, it's like insane bullish, and it's kind of got everything. But as you say, the problem is it's versus Bitcoin. So if Bitcoin goes on a crazy tear, risk of downside versus BTC. If Bitcoin dumps, increased risk and downside. So it's tricky, this one, actually, to trade from here. I think we need to see a little bit more what happens next with Bitcoin. I mean, personally, I'm still, my core Ethereum positions back from when we went down to $120, right? And
I'm that's when I bought mine too. I was in from one. So basically everything I sold in 2017, I put it pretty much in Ethereum. A lot of it in Ethereum and Litecoin and then Ethereum. But 100 to 120 I was in from then. So
that was one of those nights where I was in bed with the wife, and it was like getting up, and I'm like, I'm sorry, this is one of those times I'm gonna have to just go and buy it all, and then just if it's either gonna make or break.
Pray out here. You're like, just bear with me. It'll work out. I promise.
Probably been zoned out for about 5 hours, listening to absolutely zero she was saying as well.
Anyhow. So I don't know. I view this, as the resistance on the upside kind of is 0.076 ish. That's the fib. If we get a weekly close above that, I think we'll see basically getting up into this wick up here where sellers are kind of waiting probably up here. I would probably be 80% out by 0.11 or so, the 618 fib. And then, like I said, if we broke to the downside, I think like this is your level you want to get out. If you look at the 3-day bands, you kind of see confluence here where the bottom band is kind of support with along with this fib here. So right now it's getting rejected in the middle V band here. So I think you just have to see. We've also had you zoom in a little bit, we've had three touches on this trend line. So I don't think another one will hold. That's where it might get interesting if you do see this breakup. So yeah, it's just overall like consolidation pattern. So really there's no moves to be made currently if you're in. I would say like view this as a pivot if you get out, like if it pops it back above, maybe jump back in. But that's kind of how I'm viewing Ethereum at the moment. So
perfect. I mean, I think we're broadly aligned actually in our general views. Actually, I'm interested in seeing what you've got here. Do you want to show us where that goes?
Yeah. Okay, so before I show you where it goes is so I'm like a big proponent of like support resistance, flips. And I generally think that here we had resistance, we had the COVID crash, there was a lot of buying here, a lot of volume. We broke out, everyone is excited, up to like $500 and then had a pretty big dump. And then if you go like on the 1 day, we basically had a huge liquidation event. I think it went up to like the 50 fib here. Yeah, so it touched like the 50 fib exactly. And then you had another test at the bottom and then one more. And then you had a trend line in here that basically once that broke, then you kind of started going on a run. Well, and this is also at the weekly support resistance flip. So fast forward to where we're at now. So you have a kind of weekly support resistance area here. You can also kind of draw from this spot here. So what I did is I took the overlay from that dump back in, what was that, last October or so, maybe. And I overlaid it here. I did this probably, I think I noticed it like in here in this range. And and sometimes I just play around with fractals and see if it's gonna have potential similar PA. I noticed also that it bounced up. Let's see. So it bounced here like around the 50 fib as well. Similar diagonal resistance in here. And then we broke that. And then we also broke, I think there was a 200-day moving average, a 50-day moving average in here that we broke as well. And so, yeah, there's like kind of like 3 resistance points that it broke. And so, we're kind of trying to get above this resistance here. There currently is like a couple SFPs on the daily, but I do think, eventually we probably get up into the 2,800 range here before we hit a little bit more consolidation. And so if this does play out, I am right on my bull thesis, this could take us up into, like 20K-ish range on Ethereum.
Yeah, that's kind of where I was thinking was the max, to be honest. I mean, versus Bitcoin, the Livermore chart, which I shared on TradingView, I was looking at like what 0.1, 0.11 being the top, because for that to happen on Ethereum, we'd need to see Bitcoin also doing crazy stuff as well. So just I can't really see us outperforming 2017, but you just never know. Just generally, what is? Sorry, actually, I'll come back to it in a minute. But
let me go to Stamp here real quick. So one thing I've noticed about Ethereum, and yeah, a little bit of messy there, huh?
It's like one of those charts with the crazy guy with all of the stuff on the wall.
So the laser line.
Yeah.
One thing I've noticed here is basically like Ethereum is one adoption cycle behind Bitcoin. Yeah. So if you actually pull up the charts kind of side by side as I've done here, they're actually very similar. So you kind of had like a dump initially from like the ICO. You had a bit of accumulation here, a run up, a bit of sideways, and then another run up. And so this match in a big prolonged bear market, double bottom. So you had double bottom here and here for Ethereum, double bottom for Bitcoin. So 2015. You kind of slow, like steady run up. And I've also run some method extensions on this, and it matches up pretty well too. So I really think that it makes a lot of sense for Ethereum to possibly hit 20K this cycle, 15 to 20K. Bitcoin hit 20K last cycle, so I'm bullish on Ethereum too. I do think that they can't run at the same time. I think if Bitcoin is running, I think Ethereum is going to take a back seat, and then maybe it runs at the end.
Yeah, I mean, one of the counter arguments I would guess is if you look at the June 17 through to sort of almost June 18, that analog looks almost very similar to kind of where we are now, from a bearish point of view, just to flip it the other way around.
Which part you said from Bitcoin?
So June 17 on Ethereum, just going back to F.
Oh, okay, yeah. Let's see. So June 17. Oh, like here, you mean?
Yeah, so all of that is kind of similar. So we had that big accumulation before we got up there. Then that turned to be support for a bit, did a triangle and dumped. It's kind of similar, we had that big accumulation between 12 and 16 or 2K or whatever, and then popped up, and then we're doing the same sort of thing on top. So that's I think the bearish, I'd be to not see that, I think would be potentially not the right thing. So that was why I was a little bit concerned about the price action previously, but as I say, not enough to dump my core position. I did have a big position on the way up, which I before Bitcoin took the dump, I got out at worst case at least into Bitcoin. So I guess we've been doing like nearly 2 hours now. I don't know how you are for time, but people might get a bit tired. I could talk all day about this stuff. To be honest, it's like talking shop's great, and hearing sort of a slightly different dynamic on my stuff is also fantastic. But what's your view on NFTs, and do you have any exposure? I guess.
So I don't personally. So with the fund, we really don't have much exposure either. But so if things go well the rest of this year, we might close down our fund one and then open a different fund and have a different dynamic. And I think we're looking to get potentially invested more in some NFT stuff there. I do think the space is interesting. I forget the guy's name. It was like Croissant or something. Did a pretty in-depth look at all the potential aspects of NFTs. I think it goes pretty deep, and there's a lot of interesting parts to look at. And I think you can get interested. There's interesting parts about music and so on. It's not just like the crypto punks and so on. And I think like the gaming aspect of it is pretty interesting. I've had some friends that were interested in Axie and like some of that land grab stuff pretty early on, and they've done really well with that. I think I tend to stick a little bit more just like Bitcoin and Ethereum. Maybe that just shows like how
boring we are.
It's boring. Yeah, it's like some people are really in the weeds. We have some guys on our team that are a little bit more in the weeds than I am, and so I try to kind of keep a big picture on top of the big picture with Ethereum and Bitcoin mainly, and we do have other alts too. But I do think that let me just throw up dominance real quick, if that's all right. We can try to cap it soon, but
I do agree though. Like there's, as we were saying before, there's something for everyone, and I think the risk is you try and become a master of all of them, and you end up with not being very good at any of them. Well, and I think both you and I probably ended up talking to each other in the first place because we kind of have a similar outlook, which is get the big stuff right, whereas other people are in the weeds with literally farming, going for the really small NFT projects, finding individual NFTs, trading those, and I know that I can't do all of it.
Yeah,
such a big space.
Yeah, it is. I mean, it's interesting, and like, I love learning about new stuff too. But like, I'm a little bit slower than a lot of people, so I probably wouldn't, make as much money with some of this stuff as other people would. But we do have some people on our team that are pretty interested in it. So, but like I said, I kind of keep big picture, macro, and where is Bitcoin at, and where is the risk management aspect of it. So, in regards to, I guess, like Bitcoin dominance, it's basically almost inverse Ethereum, but here I've kind of marked the seasonal points. You can see you've had some pretty big moves. Like after the low, there was a high here and it dumped into this point. There was a low here, went up, it topped here, then it dumped. Obviously the big dump here, and I'm not really sure what happens until September. But if Bitcoin does sideways, then I could see a potential one more move down. Whereas, if we don't, then I think if we break this level in like 50 or so, I think alts are probably done for a while. But they just go in phases. So, and then this December seems to always be a great time to buy Ethereum. If you look back at the chart on that, so.
Right. Steve, I can't thank you enough for coming on today. I mean, I thought we were probably going to do about an hour, but we've done 2, and I feel like I could probably do another one. But
we'll try not to bore everyone to death. Hopefully, some people got
well, it's just good. It's just good to hear, such a dynamic view of the market, both from a macro point of view, through to sort of your like journey and experience and so on. Obviously where it's going to go next, how you manage the funds, and all that sort of thing. So, really great insight. Hopefully we'll do it again sometime, and it hasn't destroyed your day too much. So,
oh man, this is my job, so I love talking about this stuff, and hopefully some of your listeners got something out of it. And I think I'll kind of just like leave on the closing remarks of something, if you're good with that. But
sure.
Yeah. So I think I want to leave with that. It is extremely early. If you don't have any Bitcoin exposure, then definitely try to get some. And you manage your risk or the volatility with risk. I mean, a lot of the volatility is the upside, but there is definitely downside volatility as well. And so, if you're worried about the volatility, put in a lower amount, put in something you can handle, but then just hold for the long term, put it in a hard wallet or whatever. But yeah, and I think like with where macro is, like they're not going to stop printing. And so like all assets nominally are just going to continue to go up. And, Paul Tudor Jones said that Bitcoin is the fastest horse in the race, so I think, this is kind of just getting started, and it's a lot of fun, and we'll continue to be along the way.
I think that's a really good summary. Obviously, me and Steve don't actually know what's going to happen, but I think we're broadly aligned that from a macro point of view, there's a really good chance that there's still that asymmetric potential upside there, particularly if it all goes Pete Tong. So on that basis, as I say, thanks for joining, Steve. We've added you to the Discord, so if you
okay.
If the guys have any questions or anything like that, it would be great if you could could answer them. But otherwise, good luck with your fund, and
Thank you.
I hope you're right. So have a good weekend, everyone, and thanks for joining.
All right, thanks, Phil.
Ciao.
We'll see you later. Bye.